What is going on, traders? Welcome back to the Traveling Trader. So the S&P committee announced on Friday that it was going to be adding 3 new companies to the index. Those 3 companies are Etsy, Teradyne, and Catalent. You might have noticed that missing from that list is a company that has 9 times the market cap of all 3 of these companies combined. Yes, we're talking about Tesla. Now, why was Tesla excluded from the S&P 500? In this video, I will explain the reason why I think Tesla was included from the S&P 500. I will also provide you with an analysis update on Tesla's stock chart, as we've been consistently doing, and tell you what is the best way to trade this going forward given this recent news update on Friday. And if you get anything out of this video, leave it a big fat thumbs up. Leave it in the comment section below. Let me know if you're waiting to buy Tesla or if you already bought in. And if you want access to the full gamut of my trades, options, stocks, crypto, my portfolio, and access to our community of over 750 traders where we talk about strategies, what options plays we're doing, stock picks, etc. Link is in the description. I would love to have you, so sign up. So let's get right into it. All right, so Tesla was excluded from the S&P 500 index. In a nutshell, what is the S&P 500 index? It is an index of 500 large cap companies traded on the American exchanges. And contrary to some misconception, it is not the 500 largest companies. And although there are eligibility requirements to get into the S&P 500, meeting those requirements does not mean an automatic addition into the index, as we saw on Friday. Now, what are the eligibility requirements to get into the S&P 500 index? To be eligible for the S&P 500 index, a company should be a US company, have a market capitalization of at least $8.2 billion, be highly liquid, have a public float of at least 50% of its shares outstanding, and its most recent quarter's earnings and the sum of its trailing 4 consecutive quarter earnings must be positive. Now, that in and of itself is a mouthful for sure, but Tesla did meet all of these requirements with its latest earnings report that it published last quarter. Also know that the S&P committee meets monthly and they do a rebalancing every quarter, meaning they take some companies out and include some companies into the S&P 500 as they see fit, as long as they meet those eligibility requirements. So why was Tesla excluded? Well, this wasn't explicitly stated, but if we dig deeper into their earnings, we can potentially see where the answer lies. If we peel back the layers on Tesla's profitability, we see that regulatory credits solely contributed to them reporting 12-month GAAP net income of $368 million. If we remove the regulatory credit, Tesla's 12-month GAAP net income would actually be deep in the red, a net loss of $681 million. So what are regulatory credits? Well, without attempting to bore you out of your mind, let's get into it just at a high level, because it is vital in understanding Tesla's earnings makeups thus far, and in my opinion is the biggest reason that they were excluded this quarter from the S&P 500. All right, so Tesla made a boatload off of selling regulatory credits. Well, what are regulatory credits? In a nutshell, regulatory credits are basically points that automakers need to accumulate in order not to face fines in certain states. And the way that you accumulate these points is by producing zero-emission vehicles. The more zero-emission vehicles you produce, the more points or credits you accumulate. So for instance, in California, the credit requirement is 7% in 2019, which requires about 3% of a company's sales to be zero-emission vehicles. Now, we're talking about Tesla here. Obviously, 100% of their fleet are zero-emissions vehicles. So Tesla has amassed an insane number of regulatory credits compared to a company like GM or Ford, for instance, where only a very small percentage of the total vehicle lineup are zero-emissions vehicles. Now, under these guidelines, automakers can purchase or trade these credits from other manufacturers in order to stay within the quota and not get fined. So in this case, Tesla is actually being justifiably rewarded for having an all zero emission vehicle lineup. And they get to sell these credits to other auto manufacturers while those manufacturers are working to ramp up their own vehicle lineups to meet this quota eventually. Now, at first this sounded a little shady to me, that you can actually sell these credits to another company that isn't meeting the zero emissions vehicle standards. However, when you look at the rewards, Tesla is being justifiably rewarded for having a zero emission vehicle lineup completely. And other auto manufacturers have to pay for these credits credits in order not to get fined. So in my view, the banking and trading of these regulatory credits is actually an efficient market. So the S&P 500 is probably waiting to see if Tesla can remain profitable without these regulatory credits or without relying on them so heavily. Now I have to credit Robert Maurer from TheStreet.com, who actually called this out in the beginning of August, saying that this might be a factor that the S&P committee takes into account in deciding whether to allow Tesla entry into the index or not. Now, it's not all doom and gloom. The good news is that the ratio of Tesla's revenue from regulatory credits continues to drop. It was at around 10% of their total revenue in 2010 to just 2% last year. One other thing that I want to note is there actually isn't that much precedence for companies being added to the S&P 500 the quarter directly after they became eligible. Based on my research, as far as I know, this has only happened twice with Twitter and ServiceNow. Finally, I believe the hype surrounding the stock split had a little to do with this as well, even though it wasn't the biggest culprit in my opinion. Although Tesla met the eligibility requirements of entering the S&P 500, the committee probably thought that the price was inflated due to hype trading from the stock split news, and they probably wanted to let the price action die down a little naturally after the split. Now, this might have been a very minor factor or not even a factor at all, but worth mentioning and something that I thought about. All right, so how should you trade Tesla given this news? Well, if you're not new to this channel, you know that I advocate not FOMOing at the high, because as everything in nature, stock prices tend to revert to the mean. And after selling my Tesla post split, I said that I would start re-entering at the retracement to the major moving averages. And you could see here that Tesla did fall to the 21 EMA as we talked about in previous videos. And again, if you want access to the full list of my trades, my portfolio, my options trades, my stock trades, link is in the description, sign up. But if you take a look from the high, Tesla actually dropped almost 26-27% from the high. These are the types of discounts where you want to take advantage of stocks that you want to own but that are currently overinflated. And I'm much more comfortable when things start falling than when things are at the high. Like, it'll never make sense to me how somebody's comfortable buying Tesla at $500 and they're not comfortable buying Tesla at $370. Now, in my view, I do think Tesla will eventually fall to at least the 50-day moving average, because this is actually where it broke out of its last resistance level, right? So if you see Tesla's resistance here, where we tested the resistance, tested it, weren't able to break through, and then finally broke through after the stock split was announced, you know, stocks tend to retest their former resistance levels as support, and that support level is conveniently sitting where the 50 moving average is here. So I will be buying Tesla at the 50 moving average as well. What I don't want to do is buy Tesla when it's here at its peak at 500. But if inexperienced traders continue offloading Tesla, panic selling as it's going down, then I will happily buy those dips and fade the market, as I always try to do. That is it for this video. Go ahead and leave a thumbs up if you got anything out of this video. Leave it in the comment section below. Let me know if you're waiting to buy Tesla or if you already purchased Tesla. Sign up if you want access to the trade alerts in my portfolio, and if you want access to our wonderful trading community of over 750 traders. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.